So, Andrew, I don't know if you realize this or know this or not, but Americans have lost over $7.7 billion worth of retirement savings because they either accidentally or just really did not know about some of the mistakes that they could make with their 401ks.
Well, that's really disappointing.
It really is. And that is why, Andrew, we do these short educational videos to make sure that those of you who are actually watching don't fall into that category. And so in today's short educational video, we are going to be talking about 401k rollover mistakes and how you can avoid them. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing retirement process simple.
Absolutely, and we do this by incorporating a team of expert advisors ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a holistic and comprehensive roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So, Andrew, one of the things that we try to talk about with our clients all the time is not making mistakes. And when you make a mistake with your 401k rollover, you mentioned in a prior video that you rolled your 401k over into an IRA, and that was a decision that you made with the help of a competent advisor. Now, it's also important to understand that if you had made a mistake, that mistake would have been irreversible and it could have been very, very costly. So if you have actually left a job recently, as we know many people have, or you may have left a job years ago, it is really, really possible that you may have left some money in your old 401k there. And regardless of what the balance may be in that old 401k, it is vital to your overall financial future that you decide what you're going to do with those funds. Are you going to leave it at the prior employer? Or are you going to roll it over into your new employer's 401k? Or will you do like what Andrew did, roll it over into an IRA? So we know just how complex and difficult those types of decisions can be, which is why we're doing this short educational video for you. So we're going to go and I'm going to share my screen with you and talk with you about some of the really costly mistakes that you can make with your 401k. But before we do that, there are always two rules to retirement income that we always like to give you. And Andrew, what are those two rules?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
So let's go ahead and let's get educated about some of the 401k rollover mistakes that you will certainly want to avoid. Okay, so let's talk about your options when it comes to your 401k, because this is really, really important for you to really get an understanding of. Because so many people do make mistakes here. So what if you leave your employer? What options do you have? You basically have 3 options, as we mentioned. You can leave that money in your 401k at the old employer if they allow it. They may sometimes have you to have that money moved into an IRA depending on the account size. The other thing that you can do, of course, is roll that 401k over into your new employer's 401k plan. And the third thing, which is an option that many, many people choose, is that you can roll over your 401k into an IRA. Of course, this can potentially give you more control over those dollars, which is why many people don't like leaving their money, of course, with their old company since they're no longer there. They choose, of course, to roll those dollars over into an IRA. So when we're talking about rolling over your money, there are basically 2 ways in which you can do this. You have a direct rollover versus an indirect rollover. So let's talk about these 2 rollover ideas and see which one may be better for you. With a direct rollover, the funds move directly from your old 401k into your new IRA or other 401k or any other retirement account. So in this case, that money never crosses your path. You never touch it. It goes directly to your accounts. With an indirect rollover, it's definitely different because you actually take possession of that money. This is where most of the mistakes can come in. That means you are actually responsible for putting that money into another 401k, an IRA, or any other retirement account, and you have 60 days to do so before that money becomes a full distribution to you. So as I tell my clients all the time, a direct rollover is always going to be the option that's going to cause you the least amount of headaches. So let's talk about the drawbacks of doing an indirect rollover. Let's just say you have an account that's $200,000 that you're going to roll over. You're only going to get a check for $160,000. Why? Because your employer typically is going to withhold at least 20% of those funds coming directly to you for taxes. So they're going to withhold at least $40,000 on this account. So you're going to have to deposit that $160,000 into an IRA or another retirement plan within 60 days, or this entire amount is going to become taxable to you. But here's the other surprise. The other $40,000 you're going to have to come up with if you don't want to get taxed on the entire amount. So if you don't want to get taxed on the $200,000 fully, you have to come up with the other $40,000 that was withheld out of your own pockets in order to avoid any penalties if you're under the age of 59 and a half and or taxes. So let's fully take a look at how this could really hurt you if you don't have a clear understanding of what you need to do with those 401k dollars. Remember that if you're under the age of 59 and a half and you do this, I know you typically are going to get hit with a 10% early withdrawal penalty. So look at how this may look. So let's say you have that $200,000, you have a gross distribution of that amount. Federal income taxes that you're going to end up being, that's going to end up being withheld from you, is going to be 20%. So that's $40,000 right there. And then, you may have an early withdrawal penalty of 10% if you're under the age of 59 and a half off of this $200,000. So that's another $20,000. And if you live in a state where you have state taxes, let's just say it's about 3 3/4% or 3.75%, then you're going to owe another $7,500 in state taxes. So your net distribution in this particular hypothetical situation would be $132,500, simply because you decided not to get the education that you needed in order to roll over those 401k dollars properly. So we certainly don't want to be making these type of mistakes with our funds, because you're going to always want to avoid any type of IRS penalties, and you're going to want to avoid any type of full taxations on those dollars so they can remain getting that tax deferred benefit for your long-term retirement solvency. As we always say, no matter what your situation may be, please always consult with a financial advisor, a tax advisor, or attorney to make sure that you understand your own personal situation better. So I really hope that this information gave you some really good insight into how you can avoid some of the costly rollover mistakes that can be out there. Please remember that these videos are created for educational purposes only, and you should always consult with your own financial advisor, tax advisor, and or attorney about your own personal situation. And if you are looking for a fiduciary advisor to help you with these types of complex financial matters, feel free to click on the link provided in the description below to learn how you can become one of our high-value clients. For more information about this topic or any of the topics that we've shared in our prior videos, feel free to reach out to our office or leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.